G'day, mate. Shall I go put on the coffee for you?
G'day, mate. Shall I throw Pip on the bobby for you? Ripper. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You ready for Forex trading? 7:30 morning, approximately London lunch. It's a Thursday on Earth. Yeah, it could be Wednesday somewhere else. Who knows, right? April 28th, 2016. Hello! My name is Wayne. I'm a currency trader. I'm with TradersWay. Boom! Oh, snap. That just happened. Yeah, I'm with TradersWay.com. Swing on by, open up a demo account, talk to our support staff. I think you'll be pleasantly surprised. When you open up a live account, you'll find that our execution's fast and our spreads are affordable because we're an ECN. But let's say you don't want an ECN. Maybe you want a variable spread so that things stay calm during things like news events. Hey, we got that for you too, babe. We do these sessions every single day, Monday through Thursday here at Forex.Today, and every Friday at FXStreet.com, where I am speaker of the year. So thanks for swinging by. Andrew's like, does that brainwash us? Does it brainwash you? Cool. So we got some charts. So guess what? The Fed didn't do anything yesterday. 1, 2, you rock. Told you about that. And then, do you remember our discussions over the last week or two about how the media has been hyping up the Bank of Japan and that they just have to do something, it just has to do something? What has my opinion been over the last couple of weeks? Right? Yeah, be ready to be disappointed. So Bank of Japan did nothing. Yeah. 1, 2, you rock. Yeah. So Japanese yen gets strong. Hey now. Now the funny thing is if funny thing happened to me on the way to Forex. We were actually talking about it retracing all the way back to this area, weren't we? And now there's this, oh, let me get rid of that. Wow, that's old. And now, to be prepared, and I have a little thing here that I can drag across. Now be prepared to be stuck in this range all summer. Okay? Now, I remember saying it seems like it'll be like a million years before it comes back to this 108 area. And you know what? It could even come down farther. I don't care. In fact, it looks like I got something over there already anyways. Oh, yeah. So, whatever. Yeah, if it comes all the way back, fine. Okay. And you wait. Okay. Are we bears on Japanese yen into the summer? Well, the question really comes down to, is there anything that will, between now and September, strengthen the yen or weaken the yen? Okay. Yeah, there's a meeting in June. There's also a G7 about then, isn't there? Yeah, I couldn't go, but I think it's somewhere around. Miles says, well, it's overpriced. Well, maybe it was undervalued up here. Maybe it's just this move prior had to do with the BOJ just having to do something. Maybe it's just fairly priced. Does anyone know when the G7 is? It's somewhere out there, right? Something June-ish. So I'm going to go back to my message that I've had all year. Maybe September, probably more like end of the year, especially with Fed, when Fed's concerned. But you know, one thing that I had discussed in the past is like, if you look at the history of the Bank of Japan, do they ever do anything in April? Did anyone like consider just basic things like that? Like, how often does the Bank of Japan change their policy in April? Yeah, Damon says, well, by the sounds of it, probably not. Well, I don't have scientific data on it, but it just seems to me, nah. Jimmer says end of May, huh? Hey, where is it, Jim? Since you got the date, do you know where it is? Ah, oh. Yeah, it'd be fun to crash a G7 meeting, wouldn't it? Okay, so anyways, there we are. Yeah, so now what do you want to do with it? Well, wipe the slate clean and decide. Maybe it's just range bound for a while, but that's okay. Okay, and the funny thing is, and I'm pretty sure there's quite a few people here, if you were hanging with me a year ago, let's just revert back. And again, I'm not doing this to say I'm smarter, or genius, or whatever. Let's just go back to fact. We talked about the yen being weakened in December. January, yen would be strong. Then it would do some sort of sideways action. And then April, right? The end of March, the beginning of April, the yen would be strong. And then we would move sideways all summer. Now that really is what we had discussed quite literally 9 months ago, for example. October of last year, for example, right? Like not like, but mostly that's what we discussed. That's what the pattern that we discussed, right? Right, so 2 people confirm that. Okay, cool. I thought more would, but yeah. So here we are, and I'm kind of feeling like what I felt like 9 months ago. Nah, this will probably move sideways all summer. And it can lead to frustrating trading if you don't realize it's going to happen. All right, so now we got 4 or 5 people confirmed. All right, cool. So you can get in this frustrating mode if you expect the market to do one thing and it doesn't. You can get frustrated, right? But be prepared for basically, let's say, like, I don't know if this is the bottom, but it looks like it could be a bottom. And then therefore, we'll print this as a top, and cool. No, it doesn't kill. No. Don't think that way. It doesn't kill or create anything. Nothing's destroyed here. Right? If you had a million yen on your desk yesterday, you still have a million yen on your desk today. Nothing's been destroyed. Maybe purchasing power. In this case, your yen is worth more. But, I just have to suck down some coffee. Let's just be prepared for sideways action where you want to buy at support and you need to decide whether you take profit at resistance or not. Okay? And then prepare for it to, you know. So let's just say this is a bottom. This would be great, okay? Okay, and it'll probably be slow up, fast down, slow up, fast down. Not this fast, but fast enough, right? And you have to decide, right? And I'm trying to get you to think more like a professional, like a portfolio manager, right? At sometime in the future, what direction the yens are going to be, right? So let's say you buy and you don't take profit. What happens if the BOJ does something in June? Something. I don't know what it is. Who cares? More negative interest rates, buying more ETFs, paying banks to loan money out. Okay. So then finally, this move is up. So what do you, as a professional now, what do you want to do? Stare at this until the middle of June and then watch it go up to 115? Okay. So you still need to identify, if you believe these are going to be up by the end of the year, then you need to do your job. Okay, and then you might say, okay, well, the market was disappointed, but the market was heavily betting in one direction that the BOJ was going to do something, and they were wrong. So what? So the way I look at it is it gives you an opportunity to do things like consider the Aussie yen. Maybe you missed it the last move. Well, maybe you want to pick it up somewhere in the weekly, monthly support zone. See this green area? That's the weekly support zone. And this green line right through the middle is the monthly support zone, monthly S1. And then we got the bottom down in here. Okay. So, I don't know. Maybe this is the best thing to ever happen to you. Okay. Now, maybe it goes down to M1. Cool. Okay. Good. 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 Fine. Fine. Good. Okay. So your decision is what do you want to do until then, right? Well, this looks like an area in the next 100 pips. Okay. Let's zoom in again. In the next 100 pips, if you're a bull, you might want to buy this. We're at 82. The bottom of this is 81. So what do you want to do? Well, Fred says buy, buy, buy or whatever, but look, I just whatever, right? But don't freak out. Don't say, oh, it's the end of the world and all this kind of stuff. You know, that's just, that's the news throwing you off. Okay. CAD, like CAD, for example. CAD is moving based on oil prices. So you have to decide, or if not just oil completely, maybe commodities in general. Okay, how about that? Between now and the end of the year, do you believe commodities are generally going to be up or down? We did some research yesterday. By the way, this indicator, oh no, now it's working. Good, forget it. All right, so, so you got to decide how you want to play it. Okay, where's support? Okay, how about that monthly pivot point? Okay, do you want to fib it? Or how about we let this fall until we see it oversold? That's it. We had two opportunities recently that I highlighted in the past. So let's do it like this. Oh yeah, so now I got to pop it up here. Okay, and then farther out, there's that one. Let's mark it like this. Okay, and we'll do one more. Notice how I'm catching them just after the cross. Okay. And then I got to pop it up in the main part. All right. All right, so now let's take a look. Kind of looks good, doesn't it? What is that, 700 pips? 800 pips? 700 pips? Whoop, whoop, whoop. Well, why don't you just do that? Look, I just figured it out for you. Why don't you just do that? All too easy, huh? So yeah, let it come down, huh? Who cares? Okay, how about a 5-minute chart? Do you ever do, Miles says, do you really see it going all the way down to 81? It's doing higher, high, higher lows. It's all entirely possible. It's not that it will, but if it does. That's what like an ambush is, right? So let's say, using the old military strategy, you could hike around in the jungle for days. You could set up ambushes all over the place and sit there and wait, and no one shows up. The bad guys just never show up. Well, that's fine, but if they did, you would have an unfair advantage, right? You want a level playing field? No. So most of the time you should ambush, you should sit and wait. So if it goes down there, then you will have a plan. Okay? So you're ahead. You're out there, you're thinking a day or two in advance versus, trading along with it. Or that, and then what about on the 5-minute chart? So the news comes out, and you don't front run it, which is fine. Fine by me. Is it tradable? Okay. Down. Right. Back. Overbought. Right. Down, 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 down. Now you could do these little moves. Okay. But I like to let it make the lower low. Let's do it like this. Let me change the color to red. Okay, fine. So now you drag this across, new sell zone, right? You see, overbought. Down, 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 down. New sell zone. Okay. And you keep doing that until that stops working. Because at some point it will bounce somewhere, right? No, this is trending. It's not range bound. This is how you trade 5-minute charts. Miles, I haven't covered that in great detail. I just assume everybody knows. Thurlow says, do you have a target or any number of pips? Well, you could pyramid this. Or sometimes what I'll do is I'll just do like 25, 25 OCOs. Well, I guess, Miles, the book I did write like 8 years ago, right? So maybe I didn't go into this type of trading in great detail. I don't know if I did at all. Okay. But scalping, yeah, very often I just do 25, 25 OCOs or 15, 15 OCOs. I'm not in it for big money. I'm in it to get out of it, right? But sometimes when you're bored like this, you can pick up 50, 60 pips fairly easy, and you're not going to lose more than that because if you lose 3 in a row, you're just going to give up. You're like, oh man, I'm off. But it's one of these things like there's only one way to lose, right? It does this, and you should probably stop unless you want a counter trend, right? And then that's your prerogative. How to OCO? Well, there's a complicated way, I'm sure. Let's see. Oh, where did that go? Too many windows. Let's try this again. Too many windows, man. I don't know where on my computer this Windows popped up. All right, well, I don't do it that way anyways. So a couple of ways that you can do this. We're not quite ready according to the 5-minute chart, right? So let's cut the corner, look for a 1 minute. So let's say I want to sell this. Okay. So, okay, let's say I want to sell this. A couple of ways I can do this. Okay. Oh, you see my stop loss and my limit, my take. So that's how you enter an OCO. So what do you think, Zelda? Was that quick? Yeah, my fingers didn't even move, right? The reason for that is I use an EA, and it's currently set at a 2545 OCO. And this EA is called auto stop. And if I decide I want to scalp, right, I could do this like I was saying, a 1515 OCO. Okay, I could do something like this. Okay. Oh, there's that window. Nice. Okay. I don't know if I can delete this. Cancel stop. And it puts it right back, huh? All right. So let me just close this trade then. So I want to double check my auto stop. Make sure it's stuck. Okay, 1515 OCO. Okay, so let's say I want to scalp now, right? I could do this over and over again. And see, there's a 1515 OCO. So that's one way that I do it, but that's not fair because it's an EA, right? But you could actually look for it. Okay? But there's another way of doing it. Okay? So let me kill this. Okay? So let me turn the EA off. Okay? So now I sell. And I want to stop in a limit, but I don't want to have to go through and open up the window. Here's the slow way, right? Here's what most people do, I think. Come on. Okay. I think you open it up like this. Come on, computer. Okay. I think you'll open it up like this, and then I think because it's 5 digits, 50 OCO is 150. Stop. 150 limit, and then you got to go copy and then enter. I think that's how most people do it. Okay. Okay, so that's the second way. Now the third way, you ready for this? So there, the trade's in the market. I'm not touching anything. And you can say, all right, I want my stop here, and I want my limit there. And that's faster. So there's 3 ways of doing it. Okay? And what you would do on your 5-minute chart is you just do that over and over and over again. Okay? And why babysit? Okay. Very often what I end up doing, well, I'll leave it, whatever, is that I'll also look at, let's say, let's move all these charts to a 5-minute. Okay. Let me double check the EA. $25,500, huh? What a funny guy. 15. 15. Okay. And you could just scalp them all. Oops, one at a time on a window like this, and just kind of set it and forget it. Tried so hard not to lose it. Oh, in the end, it doesn't even matter. Because so when you use an EA to place your stop and your limit, you just have these one-click windows open. Okay. And you could just sit here scalping. Oh, let me change the template on this one. And so you can do this with the yen pairs if you decide you want to buy the yen or if you decide you want to sell the yen. You could trade it by just opening these up and you use an EA and you're like, this one's ready to roll, click. This one's ready to roll, click. This one's not quite ready, this one's not quite ready, not quite ready, close, close, right? And then if it rolls over, okay, click. Position sizing. Miles, you're so funny. Yeah, make it complicated, Miles. Come on, Bubba. Yeah, whatever. Okay. Okay, and then you could do it that way and you just play around with it, right? You could say, oh, this one's almost there, so on and so forth, right? And this is what you could do for a while. You thought you had to, you know, you're saying so your standard lot on the euro yen is not worth the same as a standard lot on the pound yen, so you have to adjust and all that kind of stuff? Yeah. Yeah, of course they are. Yeah. Well, I don't know. Lower your leverage so it doesn't matter that much. Yeah, just lower your leverage. I know I'm oversimplifying by a million, but you know, I don't know. I think you probably have other things you need to be worried about than that. Okay. Now it says, how can we be consistent if we win a lot and lose a little, but that little? I suppose I haven't run into that problem where your small losses are worth so much more than your wins. But and Peter says, I only risk 1% of my account on any trade. Yeah, but see, I would say that's ridiculously over leveraged. So for example, if a professional trader, based on CTA data from Barclays Hedge, a CTA, the best CTAs in the United States, these are commodities trading advisors, these are managed programs, if you want to call them Forex funds, if you will, they return 2% a month. Okay? So if you at 1% of your account on any trade, you have one bad trade, and that loss is huge for a professional. 1%! Well, if your best months are 2%, your worst month should be 2%, for example, right? So anyways, one way I'd say it is, you could try it like this way. What do you want your worst month to be? 5%, 10%, 2%, whatever. Pick that, right? How many trades do you make per day? 2, 5? Okay? And then calculate, what if every one of your trades this month was a loser? Okay? Now, one trade a day is, it's not enough trading, Peter. It's not enough. Luck, good or bad, is going to affect your sample size. Yeah, I would still lower your lot size and try to get some more trades in. But anyways, so let's say you make one a day, 20 trades in a row, you're a loser. Every single day in a row, you want that to be a loser. What do you want that to add up to be your worst loss, right? That's got to be the worst month of the whole year for you, right? Great. Is that a 1% decline? Is that a 10% decline? Okay. Right. Richard says you should make more winners than losers. Yeah, absolutely. And so, right? And then from that, you figure out your lot size, right? You see what I mean? So, for example, if you make one a day and you're risking 1%, not adjusting for compounding and negative compounding and all that kind of stuff, that's a 20% decline for the month, right? And that might be higher than you want. You might want to cut your lot size in half or into, 1/4 of that, and so on and so forth, right? Yeah, right. But so you would that would be put into your your sort of the risk tolerance. Okay. But you have to have a worst case scenario. Your likelihood of drawdown or of blowing your trading account, right? Obviously, the smaller the lot size, the less likely. The risk of ruin, for example, right? But it also gives you the ability, when the markets are moving well, to take on a little more risk, in the sense that, like today, instead of, look at the yens, right? You made one trade today? Seriously? That's it. You made one trade today. every single yen pair dropped 300 pips and you made one trade. Doesn't seem right, right? So if your lot size was smaller, you can get your trade in, right? And then try to get another one, try to get another one, try to get another one. Manage the risk as best as you can, right? Maybe you're throwing them down on 5-minute cycles like this. Throw one down, right? You got a 15. You've seen me do it. I have 5,500 OCOs. 5,500. Well, what does that say to you? I don't want to get out because I'm trading in the direction of the trend, but I'm taking risks, so I don't want to risk more than 50 pips. But if I get it right, I'm going for home runs here. I'm not trying to get on base, right? I'm trying to get the three-pointer to win the game. Yeah, Peter says you don't watch the markets all day. That's fine, but the days you know when these events are going to happen. So maybe this is a day where you do watch the market. Because you say, well, the market could move. I want to be there because this might be one of my days where I get 5 or 6 trades in. Right? Jam the stop, take a walk. So that's all. Just I'm not saying right or wrong. I'm just food for thought, right? Yeah. Well, it's not fundamentals, Peter. What we're talking about is volatility. It's an event, right? It's an event-driven. You could have an event-driven strategy where you say when let's say job reports create a lot of volatility, central banking announcements, like what else are there, right? Look at you. You avoid news events. Well, don't avoid news events. Bust out your demo and say, I need an event-driven strategy. No, do the opposite. Master it, Peter. I'll give you an example of what I've done in my life. There was a time when everybody knew it was absolutely impossible to trade a 1-minute chart. Everybody knew it. It was common knowledge. It was nothing but noise. And I thought, well, that's weird because I find the daily chart really good and the 4-hour really good. And I've even done the 2-hour and the 1-hour, right? And the 15-minute and the 30-minute seems to work. And the 15-minute and the 5. I've done the 3, the 2, and the 5 and the 3. I used to trade the 3-minute chart. I loved it. And I'm like, well, how could the 1 be useless, right? So what I did is I traded the 1-minute chart all day, every day for an entire year. Yeah, Peter's already mastering some other, right? But I'm just saying, okay, so in situations like that, and let's say just high volatility ones that we know, stuff that's on the calendar, central banking policy announcements, for example, you could say, I have an event-driven strategy that uses shorter term charts like 5-minute charts, and you're going to do price action trading after the event. Okay? And there's just kind of just to offset your current successful strategy, right? So anyways. Do we have GDP today? We do, don't we? Oh, sure, Artem. Yeah, no, and I'm not saying Peter's right or wrong, right? Just, we're just a community of traders, right? Well, Miles, my only thought, Miles, goes back to the, should we play the same lot size? I'm not saying that. Okay, so, all right. What you want is obviously either equal risk or low risk. And if your lot size is small enough where, as a percentage-wise, it doesn't matter, it doesn't necessarily change anything, okay, then that's one way. But, but that's not always available to everybody, and for account size and all that kind of stuff. So yeah, so then you need to balance it the other way. And yeah, you don't want to risk, $100 on one trade and $300 on the other. And so yeah, so there are indicators and EAs and all kinds of things that help you do that. Figure out the proper lot size per trade. So sure. Okay. Yeah, you don't want to bet more on one than the other. But like USD yen is a cheap one and all that kind of stuff. Euro dollar is a cheap one. You should probably stay away from beast and all that kind of stuff. But okay. Yeah. Holy smokes. Do you guys remember me drawing this? I believe, correct me if I'm wrong, but we were like in this area here, and I drew this triangle on the right hand side where there were no candles, right? Look at that. That's neat, huh? Holy smokes. Cool. So it comes down to the commodity play, right? Do you want to buy CAD? Oh, what pattern is this? I'm sure you could call it some sort of butterfly or bat or something. I call it Fibonacci retracement. Is all I was doing. How do you draw gray triangles? Oh, I click on the triangle thing here, and if you don't have it on your toolbar, you go Insert, Shapes, Triangles, right? Boom, boom, boom. Okay? Len says it's a bat. Cool. Right on. So oil still going up. And the funny thing is, less central banks helping out, you would think oil would come down, but again, this is doing things for much other reasons. I think we should comment a little bit on, central banks. I think they've done most of what they can do. And so negative interest rates, okay, well, fine, let's see what happens there. Paying banks to loan money out, okay, that's cool too, because what you're trying to do is increase the velocity of money and change. See, a lot of the money that's been printed has gone into the monetary base, which means it's sitting at the Fed or at the ECB or at the BOJ, but it's not actually in the market. And that, if it's in the market, it's called in the money supply, and that means it's actually in the process of being spent on goods and services and stuff. So they're trying to not just increase the monetary base, which they've already done. They try to increase money supply and then encourage the velocity of money, which is how many times a dollar, for example, exchanges hands. So I take a dollar, I buy something with it, someone takes, so now they have my dollar, they take it, they buy something with it, right? And then that person has my dollar and they use something. And so the velocity there is 3 or 4, right? Because my dollars changed hands 3 or 4 times. Okay, that means it's circulating through the economy, and that would be good, right? So they're trying to encourage that. But I think really a lot of the problems that we have around the world, let's say in Europe and in Japan and even here in the United States, it's time for the governments to do something. It's time for the governments to govern, fix some problems, pass some laws, fill some holes, change, do something, right? But good luck with that. Ryan says he thinks the BOJ did the right thing. The market needs time to get it. Well, you may recall a week or two ago, and I think it was you asked a question, Ryan, I'm not sure. But anyways, my response was I was talking about how in high school I took an economics class, and they had a computer simulation game for central banking, and it was before computers even had graphical user interfaces. Do you guys remember that? And I said it would ask questions, and you'd make a small change. And what the computer program told me is that nothing would seem to happen. So you would try to like make another change, nothing would happen. You'd make a third change, and all of a sudden the whole thing would collapse. And you're like, wow, it went from nothing happening to something drastic happening. And I think that time I was talking about how I used to work at NASA, and I had to dock the space shuttle at the ISS through simulation with a team and all that kind of stuff, right? A small change had profound effects, especially over time. So going back to those discussions we had 2 weeks ago and why I thought the BOJ would not do anything, okay, they did something radical already, and that's negative interest rates. And they're also buying up, they own, and I remember talking about this too, the Bank of Japan now owns 10% of all 225 companies listed on the Nikkei. They own 10% of every company in Japan. Holy crap! It's amazing! It's ridiculous, right? So why don't we just like, whoa, why don't we chill out and sit on the strategy for a while? Let's give it 6 more months and see what effect it has longer term. That's all I was saying 2 weeks ago when I said I don't think the Bank of Japan is going to do anything. It makes no sense to me why the Bank of Japan would take a risk and make another change. And if that doesn't work, make another change. And if that doesn't work, well, that sounds like a stupid reporter at some dumb, newspaper, magazine, or talking head show. What a dumb thing to even consider, right? What kind of idiot would say that? So anyway, so I said, no, they're not going to do anything. Because, right? Just basic central banking policy or methodology or whatever. So anyway, so they didn't do anything, and that makes sense to me. Okay, cool. Andrew, Wayne, while we're looking at long-term recovery, is there such a thing as the opposite of QE? Apart from, well, they're going to have to sell those bonds or let them expire, right? So is that what you mean? So when you have let's say inflation goes to 5%, that's too high, right? What does the central bank need to do to offset 5% inflation? raise interest rates, let's say to 6%, right? How does the Fed raise interest rates? They don't pass a law. They change its rate. How do they do it? What is the mechanism in which they adjust interest rates? Monetary policy. You guys are so funny. All right, fine. Okay, the Fed sells bonds. Okay? So they sell, I'll just pick a number, $100 billion in bonds. Where do they get the bonds? Yeah, thank you, Felipe. I'll blurt it out. We'll see what happens. They already have they already have the bonds. They have like $3 trillion in bonds. Sally Pup says, where do they get the 10 million, 100 million? Who cares? In this case, they already have the bonds. Right? You guys remember their balance sheet? They bought like 3 trillion in bonds. Okay, 0.7 is advanced GDP. I don't have the numbers on PCE yet. 0.5 annualized. Consumption 1.9. It's pretty good numbers, guys. Jobless claims 257. Yeah, we got some good numbers across the board. 2.1 on the PCE. Holy smokes. Consumption's up. Expenditures are up. GDP quarter over quarter 0.5 versus 0.6. Okay, that's a miss. I think that changed on me. Yeah, but pretty good numbers. Boom. Okay, now can we move on? Okay, so they already have 3 trillion in bonds. They already bought them. So now they're going to sell them. What happens to the price of bonds? So you have to look at supply. Okay? Okay, quantity over price. Demand, supply. Can you guys see that? It's probably hard to see. Okay, so supply goes up, right? So you got to label your charts. Come on, right? Every Harvard student labels his charts. Demand, supply. So supply goes up. Supply goes up. Wait, do I have this right? Let me think of this. So supply. So I know price should go down. Wait, I have this weird, huh? Supply. So demand. If I lower demand, so supply goes up. So supply goes to the, oh yeah, supply goes to the right. Hang on, there we go. All right, so now this is supply 2 because the amount of bonds in the market goes up. The supply curve shifts to the right. The equilibrium price used to be here, but now it's here. Supply goes up, price goes down. Okay? So price falls in the bond market. What happens to interest rates when prices fall? Interest rates go up. And they go, okay? And the Fed will keep selling bonds If 100 billion won't do it, how about 110 billion? Because maybe 100 billion only raises it to 5.8, but they want it to be 6.0. So they're like, well, how about 110? That gets it to 5.9. How about 115 billion? And then finally they hit the 6.0. Okay? And they just keep selling bonds until they hit the 6%. Okay? And if it goes to 6.1, they buy some back. Another, right? And they just keep it at 6%. That's actually how it works, guys. When the Fed says we're raising interest rates a quarter percentage point, right? 0.25%, it's not a law. It's not like the banks suddenly have to pay more by law. No, the Fed actually goes into the open market, okay, and buys and sells bonds. And they force interest rates up or down. Isn't that cool? What else can they do? They can adjust the reserve requirement ratio, right? And they can change the discount rate. Okay? And that's going to affect excess reserves. Okay? Reserve requirement ratio, that's required reserves, so RR, and this one is plus ER, right? And then this is called open market operations, or an OMO. Okay? And if you guys want to know more about this, about how central banks do this, and even how commercial, because you can't talk about central banking until you learn about how to balance a balance sheet for a commercial bank, right? So if you guys do want to learn more, you can go to http://training.fxbootcamp.com. There's a fundamentals course. And I'm actually uploading a new video today about balance of trade, balance of payments, current account, capital account, and how that affects things like central banking policies, how that affects the foreign exchange market. And I even get into the fun topic of sterilization. Holy smokes. Wait till you blow away your friends at the barbecue this weekend talking about bond sterilization. Holy smokes. You're going to be the coolest kid on the block. Sterilization. Whoop, whoop, whoop. So I recorded it. I just haven't uploaded it yet. Yeah, they're going to be blown away, right, Miles? Yeah, exactly. Did you say sterilization? Yeah, sterilize all my bonds. So anyways, cool, huh? So that's oil. So how did the market respond to the news? Dollar went down a tiny bit and went up a tiny bit. Thank you, GDP. Hey! Yeah, so nothing happened. Cool. So yeah, so we need to decide long term what we want to do with these yen pairs. It's we formed like now I want to go back. Let's do a different yen pair, or should I look at gold and all that kind of stuff? I guess we should. Why don't I finish what I was originally thinking? Okay. So earlier you can see we had a trade plan here, hoping to use the monthly and weekly central pivot points as resistance. Something changed the game, made it support. Okay, cool. Love it. So what's the plan, Stan? The plan is if M2 is your bottom, what's the top? Come on, Bubba. There we go. Okay. Wow, that really messed up my pivot, huh? Yeah, I've never seen that one before. There we go. Yeah. So if you want to trade gold, your next buy zone is here, yo. And it's just that easy. Target is up there. Now, are we going to get there? I don't know. No one knows. But it's a monthly resistance pivot, weekly reversal pivot, right? Seems good enough if I was a bull. The price action's there, right? At this point, this is support, right? Then the higher high sets your 1, 2, 3 reversal, roll reversal type thing. Okay? You can see it's 618 to 1382. That's textbook. Hey, I should write a book and put that in there. Oh, wait, I already did. 8 years ago. If you get a 618 Fibonacci retracement, that predicts a 1382 extension. Oh, snap! Must be a good book. Now remember, on Amazon.com, one person reviewed it saying it was the worst book ever written. Not trading book, not Forex book. The worst book of all time. Awesome. Like, hey, but it was my first book. So anyways, so if I was playing this as a bull, okay, I'm going to play it like this. Thank you, Guy. Well, it bothered me a long time ago. So that's how it feels like a little switcheroo. But do you remember when we were talking about this in here? I was just playing the fact that it made a lower low, so I had to play the lower high. And then you look at a cluster of central pivots that seemed like that would be logical. But do you remember I felt out of place because we were nowhere near the M3? Remember that? I'm like, I kind of feel weird. Like maybe, so therefore it's predicting an even lower low, so you had to be pretty aggressive and all that kind of stuff. Well, maybe that sort of proves that point in here. Yeah, I don't want to go back to the ends. I think we've talked that one through. Yeah, I wanted to write another book too, but now that I'm in grad school, I don't have any time. Now, my summers are booked now because I'm in summer school. So when am I going to do that? Yeah, in my sleep. It's funny. I actually work in my sleep. I really do. I actually work in my sleep. There's no doubt. Very often I have to wake up in the morning, or sometimes I'll wake up in the middle of the night and I have to write it down because I've been working on it. And and this is no joke, one peculiar problem, it was a couple of semesters ago, and I had a math problem that I was working on. It was like a formula or whatever. And I just couldn't get it. And I worked for hours on it and couldn't get the number. And then went to bed and worked on it as I slept. And the alarm went off in the morning, and and my eyes are still closed. And I told my wife, I'm like, grab your phone, get the calculator out, type all these numbers in. Is it like 4.2? It was like a complicated math problem. I haven't even opened my eyes yet. She's like, yeah, 4.2. Boom, I got it. No joke. Yeah, that happens. Yeah, cool. Isn't that amazing? Yeah, right. No. So I love it. Crunched it and crunched it and crunched it. So, anyways, all right. So Euro USD. I got some more lines here on the chart. Right. What do you want to do with Euro? Well, nothing's changed. Isn't that funny? Here's yesterday's range. Let's bust it out to the hourly. You know, nothing's changed, has it? So you need to decide whether you're a bull or a bear, whether you want to buy or. I mean, I know it's very repetitive. I don't know why you fight me on it. But you know, prepare, I guess, on these pairs for a little bit of range here. But I still would recommend, picking your lines and saying, well, if we get up here again around, if we get above 14, I'm going to look to sell. Okay. And then, of course, your your first ambush is going to be somewhere like right where we are now. So between 1350 and 14, it's really not even 14, is it? It's 1380. I mean, we're only talking about a 30 pip range or maybe 25 pips, right? Trying to incorporate as much in there as possible. So it's really somewhere between 50 and 80. Okay. And then where's your buy zone? Oh, look at the time, man. I've gone too long. Sorry about that, guys. Um, where's your buy zone, right? And then I'm going to drop this down to here. Okay, and then you might as well just do this. Okay. Just manage it the way you want, right? Do you see a head and shoulders type pattern? No. What I see generally is sideways with a little bit of stink that way. Okay. Yes. Okay. Yeah. Is CPI inflation? Yes. The consumer price index is a basket of goods and services that people buy and sell on a regular basis. And I forget how many, but I think it's like 1,000 things, from the cost of bread to the cost of gasoline to the cost of a lawyer. Okay. So if prices are going up, generally that's a bad thing. Now, the one thing to discern is, are prices going up because you're rich, or are prices going up because your money is worthless? Okay. Yeah. Well, so there's the interesting concept of the United States um, is rich and it buys things from other countries. Okay, that actually keeps inflation low until too much money, is in the United States, let's say, and inflation does start to go up because everyone has money, and you're doing silly things like refinancing your second house to buy yourself a Cadillac Escalade. Remember those days? Now, I saw The Big Short when I was on my way to China. I did not like the movie. Way oversimplified and a little bit silly. Um, but there's a funny scene in there where he's interviewing strippers at a strip club because he finds out that, strippers have a lot of cash and they're buying houses. And he's talking to one girl and she's got like 5 houses and a condo. That's when you have a lot of inflation, when everybody in the economy has a lot of money. And of course, you're leveraging up and all that kind of stuff, right? Yeah, you know what? I wouldn't actually recommend it, Kareem. Yeah, Anthony just came running from the other room. Yeah. So anyways, so there's that situation where money is circulating, and then you borrow money and you leverage up. You're buying a house, and then you're buying a BMW, but you're going to make payments, and all of a sudden you leverage up, and there's too much money in circulation in the United States, and inflation kicks in that way, right? And then interest rates need to rise, and then it slows that whole thing down. Well, what about a country like Venezuela? Well, actually, let me back up. So in the United States, it's usually a fairly good thing that there's some inflation, and America is rich, so it buys from foreigners, and it keeps inflation low because because your prices are lower. You can get a TV from China or Korea or Japan for like, dude, $800 here in America buys you a really nice TV now. $1,200 buys you a ridiculous TV. If it was made in America, it'd be $5,000, right? So anyway, so if you're buying Chinese TVs, boom, cheap, keeps your prices low, right? But eventually, inflation will kick up. But it's because there's good money, there's money in the economy, and people are spending, the velocity is going up, and all that kind of stuff. And there's economic activity, and foreigners are investing into our economy, and whatever. It's good, right? Now you have Venezuela. They also have inflation. Do they have 5% inflation? Do they have the 8% inflation? No, 700% inflation. And the reason for that is they're dirt poor. Well, how do you get inflation when you're dirt poor? You print money to pay for your debt. You print money to buy food. You print money to keep the electricity on. Okay? Sort of like running your entire economy on a credit card. Okay? And so what you're doing is increasing money supply, right? So for example, if you print, let's say you have $1 billion in circulation, or billion notes in circulation, and you decide to increase that to 700 billion, right? Each currency should theoretically buy 1/700th of what it used to, and that's what's happened to Venezuela. This is what the Bundesbank did after World War II in Germany, and it got to the point where in Germany you needed a wheelbarrow full of Deutschmarks to buy a loaf of bread. Yes, actually happened. Yeah, Zimbabwe, something like, 230 million, yeah, 230 million percent, yeah. Pretty good, right, Peter? Zimbabwe is another one. So luckily we don't face such things. But monetizing your debt is pretty attractive, and on the short run it works beautifully. On the long run, it's the end of your economy. Okay. So anyway, it's got to go. I'm sorry it's been so long. I've dragged on for like an hour and a half or so. I apologize for that, but I do appreciate you. I love working with you guys every day. I look forward to it. Sometimes trading currencies can get tedious, boring. This is the best time of the day for me. We should get together somewhere exotic, right? Daniel hung out with me at the Ritz-Carlton VIP Club, I think twice a day for a week. Yeah. Great, right? It was nice. Hey, Daniel, you know what they did as a thank you gesture? They just contacted me yesterday. 2 free nights at the Ritz-Carlton. I'm like, oh, what? I think I paid too much. Yeah. They're like, how'd you like 2 free nights at the Ritz-Carlton? I just spent a week at the Ritz-Carlton. Well, okay. Right? The rich get rich, the poor get poor. So anyways, I appreciate you guys. I think we should meet up somewhere exotic. But I don't have any time. But yeah, Philadelphia. You know what? I'd love to go to Philadelphia. Motown Philly back again, doing that little East Coast swing. Boys to men, going on, not too hot. Stockholm, I love Stockholm. Yeah, I hung out with your royal family in the what do they call it? The old city hall, the old castle. Yeah, Cape Town looks really nice. I'm gonna go to Joetown though. Yeah, Sweden's beautiful. Oh my gosh. So I'm on my way to meet my first royal family. Right. I'm actually having dinner with the royal family in a castle. You know, a North American digs that kind of stuff. You're like, a castle and a royal family. Yeah. So anyway, so we're out there, and it's got some beautiful, it's on a beautiful waterfront, and on the other side there's like Old Town Stockholm. And it's the most beautiful day, the calmest air, the sun is setting, and to make it even more beautiful, hot air balloons floating by. I'm like, this is ridiculously beautiful. So, yeah, Lynn, I've been to that one at Half Moon Bay. Oh, I don't know, a dozen times. I love it. Yeah, that was my old haunt. I have ghosts hanging out there. So, anyways, yes, yeah, Sweden's beautiful. Yeah, you're in Cape Town now. Is that, yeah. Kite servers and yeah, it looks beautiful. So I'll be in Joetown. I don't know when, right? Is it July? July 11th. Cool. Yeah, it's gonna be great. All right, I gotta go, guys. I love you, babe, but I gotta jump. Tomorrow I'll be at fxstreet.com, right? Tomorrow's a Friday, is it? Is it tomorrow's Friday on Earth? Yeah, cool. So I'll see you over there. Remember, leave some comments for the for all the authors and analysts at Forex.Today. Let's do our best to make it the best community it possibly can be, huh? I got some surprises coming up very, very soon. Forex.Today is going to have some new features for you so that you guys can communicate with each other. Fred says you can never get into FX Street? Oh, yeah, you got to pay money. That's, yeah, if you pay some money, it's pretty easy. Yeah, good. Yeah, no, that's going to be there. Wink, wink, nudge, nudge. So, cheers, guys.